Yep. Is the sound okay? Just let me know. I think it was the microphone was off for the whole introductory part. So yep. Okay. Sound is back on. Okay. Okay, so let me go through the introductory part again. Yes, thank you guys. Hello, Steven. Hello, Joyce. Um, yeah. Okay, so let's start over. Hello, everyone. Thank you for joining us for this week's live brief. As per usual, we're gonna go through the economic calendar and the charts. We have some pretty interesting setups this week. So before we begin, let me know if you can see my screen. I don't know why it's not loading. I'm showing the calendar right now. Can you guys see the economic calendar on your screens or the charts? Because I see charts, but I'm showing calendar. Okay, let's begin. Let me guys know in the comments if the screen is not showing what I'm talking about. We're gonna start off with the calendar. So if you go on your Exness platform and you click here on the square and click personal area, it will take you to this screen. And if you scroll on the left here where it says analytics and click on economic calendar, you're gonna see the updated framework for economic calendar for this week. You're seeing charts. Yeah, I don't know why is that. Yeah. Yeah. So let me check now. Yes, it's working. Okay. We're back on track. All right. So if you go on the economic calendar on your Exness personal area, you can see what's happening. You can select the time that you want this week, tomorrow, just today's data. You can select the countries that you want to see data from, and you can select here the impact of the data that you want to use, that you want to see. Usually I just select the high impact because I need market moving data, right? So you can go through and see what the previous data was, what the forecast is, and the actual is data that we actually have publication on, and we know the updated figure. So if we go through what's happening this week, as you probably know, this week we have the Fed interest rate decision, which is on Wednesday. Here it is, Fed interest rate decision. It's expected to remain stable at 3.75%. Previous one here, the forecast here, and when we get the figure, we're gonna have it here in the first column on the actual. On the same day, on Wednesday, earlier before the Fed, we have the Banks of Canada interest rate decision, which is also expected to remain stable at 2.25. So we have two quite important releases on Wednesday, Bank of Canada and the Fed. The Fed's decision, if we check the Fed Watch tool, if you go to cmegroup.com, you select markets, interest rates, and then CME Fed Watch tool, you're gonna get this screen. On January's meeting, you can see here the probabilities of the current rate 3.5 to 3.75 remaining is at 97%. So it's pretty much priced in, right? So even if we get the interest rates on hold, then there might not be so much volatility on the US pairs. But what's important is the Fed's press conference. So usually we do get some reaction to the Fed's chair, Jerome Powell's speech. Volatility spikes there. So the wording on the press conference in this case is somewhat more important than the actual release, right? And the actual figure on the interest rates. So being on the Fed Watch tool, let's see what the expectations of the next meeting is in 18th of March, which, as you can see here, it's still that we might see a hold on the interest rates in March, and same goes for April. So the first rate cut for now is expected around June, on the June Fed's meeting, 17th of June, which is slightly higher than the hold. So we still, this is not actual confirmation or validation of the rate cut in June. We have a long way until June. We have a lot of Trump tweets or whatever from now until June. So anything can change. These probabilities change by the day, but this is the image for now, right? So what else do we have for this week? Consumer confidence from Japan, initial jobless claims, important but not that much market moving. We have some European countries releasing their GDP growth rates. We have France and Germany. This is preliminary data, right? Flash. So it's not the final figures on the GDP, but we get an estimate on what is expected or how these European economies are behaving. I think the most weight is carried by Germany, which is the biggest economy in the European Union, which also affects the European data, both the GDP growth rate, and also next week we have European inflation, I think. Yeah, it's flash data from the European area's inflation on next Wednesday. So this data might shift if we see any significant deviation on the German GDP growth rate, and as well as inflation, right? Inflation in Germany is expected to go down to go up by 0.1% for January. So that's relevant data. It's preliminary. That means it's the first piece of data that we get for German inflation. So if we have any deviation from the forecast, then the European inflation for next week might get also affected. Okay, on the same day, on Friday, we have the European GDP, again flash for Q4. Important data, yes, is not final though, and it's for the previous quarter, so we'll see. And on the same day, we have the US Producers Price Index, which is expected to tick slightly to the downside from 3 to 2.9% for December. That's the yearly figure. Month over month is expected to remain the same at 0.2%. So we have some data for this week. The most important, of course, is the Fed, and then Bank of Canada's interest rate, and then the rest. Because it's preliminary, it's flash data. It's not, uh, the final figure, right? We've seen what's happening with FedWatch. The probabilities are for a hold, so I don't believe that we might get anything else apart from stable interest rates in the US. Right now, speaking about the US, probably you've seen it, probably not. The dollar index is in a bearish, aggressive bearish correction phase, right? So what does that mean? It means that the dollar is under pressure. So if we Google the 30-year Treasury bond yields from the States, you see that interest rates on the 30-year bonds are declining, right? So, and same goes for 10 years. So the image here is that the dollar is under extreme pressure. We've seen recently how in the Davos Economic Forum, Donald Trump kind of announced that they're not going to take any military action against Greenland, but they will try to find a diplomatic solution to the problem. Where, in my personal opinion, I don't think there is any issue with Greenland or Russia or China taking over Greenland. Nobody said that Russia and China wanted Greenland. Anyway, I believe a real issue with Greenland is the rare earth metals, which that's what Donald Trump wants. We've seen how the tech industry is investing heavily in AI, so they will need the rare earth metals for the chips and production units and data centers and all of that. So what I'm trying to say here is that one of the main reasons that we see pressure on the dollar is that many European countries, started dumping U.S. bonds, right? So when you have big sell-offs of the bonds of a specific country, the currency of that country gets under pressure, right? So that's why that's one of the main reasons, not the only reason, but one of the main reasons why the US dollar is under pressure, right? So the dollar being under pressure has some domino effect on the markets. So let's start off with our charts. Now, before we proceed to the charts, please guys, let me know which instruments do you want me to check. What instrument you want me to analyze. Let me know in the chat. Also, before we begin here, this is a demo account. The charts that I'm showing is a demo account. It's not a real account. Anything that I say, it's my personal opinion. It's not financial advice. It's not representing the company. This is just my personal opinions, and anything that I mention here is for educational purposes only. So feel free to post your questions. Feel free to let me know if there is a specific instrument that you want me to check as we go along. Obviously, gold is gonna be one of them, but if you have anything else specific that you want to check, please let me know on the chats. Okay, now starting off with crude oil, We've seen a bullish correction since mid-January. So this is a 2-week bullish run, if you can call that. We see that the price has found sufficient resistance 2 times over the past couple of weeks around the 50% of the Fibonacci retracement level, which is around $61, right? And it's currently correcting to the downside. Sorry. What I would expect probably from crude oil, let me also plot the 23.6, which is a lower level here. Okay, if the price manages to cross below the $60, which is the psychological support of the round number, right? And also an area of price reaction multiple times in the past. If we can highlight here the times that the price reacted around $60, right? You see that it's multiple times. So 60 being the psychological support. In this case, it was a resistance. It corrected to the downside. So in this case, it was a support. So you get the idea. 60 is a strong technical support or resistance level on the chart. So what I am personally thinking of doing is waiting to see if the price makes a valid close below 60, right? Then I might start opening some short positions with first target 59 and then 58. 59 because it's the 100-day simple moving average. The blue line here is the 100-day moving average, and then 58 because it's the combination of 23.6% Fibonacci retracement level and the 50-day moving average. So, but my validation or trigger point is for the price to close below 60. If it finds sufficient support on the $60 area, then I might start building some long positions once it crosses above 50 Fibonacci retracement with first target around 62. 62 might be a strong, another strong technical resistance because once again, in the past, the price found sufficient support around 62. So 62 is a strong, another strong technical resistance. So the area between 60 and 62 might be my trading range that I want to profit out of or gain out of. But when it reaches 62, I will be paying close attention on the price action to see either close my position or build on it if it breaks above 62, which is highly difficult scenario because 62 is still a relevant resistance level, you see. So and it's also the golden ratio of 61.8 Fibonacci retracement level, so it's very strong technical resistance. If it goes to the upside, we might have a continuation of the bearish, recent bearish action here, and it might extend to the downside. All right. Now, moving on to gold. Gold has, let me go up to, sorry, I was checking lower time frames. Gold has once again broken an all-time high, made a fresh all-time high. I don't want that. Okay, let me zoom in a little bit here. So what I see on gold is that, first of all, I'm not touching gold for this week, right? Because it's an all-time high. It's not very wise to jump on all-time highs, especially if you're going long. If you're trying to find an area to short it, again, too risky because there are essentially minimum to none indications of a reversal just yet, right? The only thing we have is the overbought stochastic oscillator, which is not that relevant when it comes to gold, as we've seen back in September, October of 2025. We had 2 months of consecutive overbought conditions on the stochastic. So when it comes to gold, it's not that relevant, mostly because gold is mostly pushed to the upside, not by technicals, but by fundamentals, right? We see the geopolitical tensions around the world, not just with Greenland. We recently seen what's happening with Iran. We see military action from different countries and so on. I'm not going to get into too political discussion, but what I'm trying to say is that tensions spook investors, and they eventually seek the safe haven um, environment of gold, right? We also have weaker dollar, which also pushes the price of gold to the upside. We have central banks buying and major ETFs into gold because of uncertainty, general uncertainty in the market, not just geopolitics. And we have big momentum. We see here the price is trading above the upper band of the Bollinger Bands. The Bollinger Bands show volatility in the market, right? So we have strong volatility with no signs of reversals whatsoever. So the only way forward for gold is up, right? The issue is we don't know how much potential there is to continue trading upwards, right? So that's why I was checking the lower time frames to try to see if there is any setups, a minor retracement intraday that obviously you cannot see on the daily chart. You have to go down to the hourly chart or 4 hour or half an hour or even the minutes if you're a scalper to try to find an entry point. The issue there is that we might not have big potential of profit, and then the risk to reward ratio might be too low and not sufficient to sustain our account, right? US government shutdown on 31st of January. I didn't find anything on the news about that. Don't know if you have any inside info, but I haven't read anything about government shutdown. In any way, a government shutdown will create more uncertainty, right? So another factor of pushing the price of gold to the upside. So if we have a government shutdown, then we might see the price of gold reaching new all-time highs. Is dollar yen still considered a safe haven? Yeah, thank you, Joyce. That's a really good question because I don't know if you guys seen. Let me go back to previous month and let me find. Actually, let me search it. Japan interest rates. Come on. So back in late December, right? December 19th, we've had an interest rate hike by the Bank of Japan, right? So what that did to the markets, dollar yen, I was going to show you, but let's check it right now. How that affected the markets is that we had an initial high on different yen pairs. You see, dollar yen, euro yen, it reached. I think euro yen was all time high. Yes, dollar yen it was not all time high, but still high for the year. So and also pound yen, same issue, all time high here probably. Yes, so that boosted the price of those forex pairs, because current trade operations might not be that profitable anymore because we have higher interest rates on the yen, right? So this created some interesting setups that I was mentioning in the beginning of the live stream. So here we have on dollar yen, we have a very strong bearish correction. You see here the price is trading below the lower band of the Bollinger Bands. That means volatility is very strong. We have a weak dollar for this week at least, which I think it will hold up until the end of the week and probably next. So what's on my radar for this week is dollar yen shorting carefully. Why? Because at any given moment we might get a bullish candlestick that pushes above any bearish indicators. As you can see here, the last 2 or 3 sessions pushed the stochastic oscillator into extreme oversold levels. So that means that we might get a correction to the upside. But I am more biased on shorting dollar yen for now, starting off with small lots, small lot sizes, and increasing it as the price goes down. If it continues to go down, which I firmly believe that it might, because all the data that we have and the upcoming Fed meeting shows that interest rates will remain stable. We have a lot of selling pressure on the bonds market, on the US government bonds. So the dollar is in great and is under great pressure. So I am more biased into shorting dollar yen with target around 152 or even lower. Of course, this is more suitable with a trailing stop, because if we see any significant sharp move to the upside, you don't lose all of your capital on a single trade. On which level we can say gold may bearish for short term? I don't think I understand the question. You mean at which level we can short gold? Some RFX9, can you please rephrase your question? All right. So yeah, I hope I answered your question on dollar yen. Joyce, is it considered is it still a safe haven? Personally, I think still yes, because the interest rates between the Japanese rates and the US interest rates are still in favor of the dollar. So current trade operations are still relatively profitable, but not as much as it used to be, right? When the interest rates in Japan was essentially zero, and we had over 4% in US interest rates. Now it's shifting slightly. I think it's still a safe haven, but to a lesser extent. I think there are other instruments that might outperform this 3%, 2.75% difference on the interest rate. I think you can get that percentage elsewhere. All right. On which can we say gold? Yeah. So at which level can we short gold? Short answer is don't touch gold for this week at least. But if you want to find an area, I would suggest that you go down to lower time frames, probably the hourly or the even the half hour for intraday setups. It's very difficult to time when to short any instrument that is at all-time high, right? Let's start off there. It's a very risky trade, but as I've said, my personal approach would be try to find a lower time frame formation. For example, if we have a head and shoulders or something forming on lower time frames, and then you get an idea of possible entry points of shorting the instrument that is all-time high. All right, I hope I answered your question. Some RFX9. Okay, I'm running low on battery, so all right, let's keep going. Now, what's happening on other pairs? By the way, guys, again, let me know if you have any specific instruments that you want to check. We've seen gold, we can check silver, is the same image whatsoever, new all-time high. Again, extreme overbought conditions on silver. Silver is also affected by production, essentially manufacturing data or industrial production, especially when we get Chinese industrial production. Silver tends to move quite a lot. Industrial. I don't want China industrial production. So the next time that we have, the last time, sorry, that we had industrial production was on the 19th, and it came out higher than the expected. It was expected to go from 4.8 to 5, came out at 5.2. So that, if we go back on gold, 19th of January, it was around here, and it created another bullish run after the release, right? So it's identical to gold. Personally, I'm staying away from it. If you want to find any entry points, I would not suggest, but probably check lower time frames to find some entry points. For example, on silver, if you were on 4-hour chart yesterday, you could probably catch this bearish correction and enter somewhere around the 26th. That was yesterday, right? So over the weekend, through the day yesterday, we had a bearish correction phase to the downside that you could catch only if you are watching lower time frames. If you are on daily chart, there is no bearish candlestick to see, right? You see these big wicks and tail. That means that volatility was increased yesterday. It's reasonable probably after the US session kicked in, right? All right. What else we have? Joyce, silver, I just said. Bitcoin, yeah, let's go through. All right. Bitcoin has been trading in a sideways movement for the past couple of months. I've mentioned it in previous live briefs that until I see a valid break above the 61.8 Fibonacci retracement or below 78.6, I'm not touching Bitcoin because there is not much conviction or major factors affecting Bitcoin for now. You see that Bollinger Bands are slightly expanded recently, but throughout it was relatively contracted. Bollinger Bands are the orange line, and it shows volatility. So volatility is not back into cryptos just yet. And if we check on fear and greed index, we see that the sentiment of the market is still very low. It's in fear. It's at 29%. So again, we don't have sentiment, we don't have volatility, we don't have any mainstream media coverage for cryptos, which usually they do when we have something important happening in the crypto world, especially Bitcoin. So for me, if I had to trade Bitcoin, currently actually is a very good area on the spot, on any area on the chart for me, because it seems like it's rebounding on the lower boundary. here on 78.6 and lower band of the Bollinger Bands. Also, stochastic is in extreme oversold, so everything tells me that we might have another bullish correction phase, probably around 95 as previously, right? So Bitcoin is trading in a sideway range, and I don't see any factors that tell me otherwise. So if I had to trade Bitcoin, I would probably use the 95 and 86.5 as the upper and lower boundaries of Bitcoin targets, right? And US 30. So we have a continuous bullish trend to the upside. Recently we have, sorry, let me change the colors here because I don't like that. Sorry, give me a couple of minutes. Okay, so quite solid bullish run on the index here. Recently we see a kind of a plateau, right? It reached an area and it just failed to break above it just yet. Probably we will have the same image repeating, basically because we have the Bollinger Bands contracting. That means that volatility is slightly drying up. The stochastic oscillator is not in extreme overbought conditions, even though we had bullish action since the beginning of the week. That was yesterday. So probably same image might price action might mirror the previous previous sessions performance like that. If we see continuation to the upside, then you know your entry point, right? If it breaks above the high here, then you can open some long positions to catch further potential. But personally, I believe that due to volatility being low, right, we might have similar price action as in early January here. Of course, when you're trading index, the only thing that you see on the daily chart is that it's just a thing going up, right? So probably you want to again drop into intraday performance like the hourly or the 4-hour chart to find some sweet spots for the index. All right. I hope that helped, Joyce. Thank you for the question. All right. What else I wanted to show you guys was the performance on Australian dollar against the US dollar. I know it's not a very popular pair, but I don't really mind popularity as long as I find a good setup, right? We see here it's in yearly high, right? Last time it was in September of 24, and then previous to that, this this area on the chart was last tested in February of 2023. So we have a rare occasion on yearly high. A rare occasion, I mean, we don't see these values on Australian dollar against the US dollar. Recently, the price reacted exactly on the 78.6 Fibonacci extension level, right? It's different from the retracement level. The extension levels of Fibonacci shows you areas on the chart following the recent trend, where in this case we had a bullish trend, right, since the beginning of 2025. It's a more long-term value, which makes it more accurate, right? And the 78.6 was tested, and then currently, let me zoom in a little bit here. Currently, we have two doji candlesticks after some pretty solid bullish run, which is also outside the upper band of the Bollinger Band. So for me, that's a warning. It's not a confirmation. It's a warning that we might have some strong pullback in the coming days. Probably I would wait after the Fed's meeting on Wednesday to avoid any intraday volatility that could close out my positions before the price goes to the targets that I want. So what I'm gonna do after Wednesday, after the Fed's meeting, is that I'm gonna wait out after Wednesday to see if the price does start coming down, and then I will start building some short positions. Probably if the price reaches lower the higher high, if we can call that, of the latest bullish candlestick around 0.689 or 0.69 if we're talking about round numbers, and then start catching the downward potential with first target the 68.4 probably, which is the 61.8 of the Fibonacci extension level, and then the first target might be 67.5, which is the 50% Fibonacci extension, which is also the latest high here in 7th of January. Just yes, Australian dollar. Yes, I just said that. Welcome, Mahmoud from UAE, a Sudanese watching from UAE. Hello, thank you for joining us. All right, so this is an interesting setup that I'm not taking any action just yet, but I'm keeping an eye on it to probably start catching the correction phase to the downside, right? Now, the exact opposite image we see on dollar African rand, where we have a very aggressive bearish rally since April of last year. I think it's probably all-time low. Probably. No, but it's the low since June of 2022. So that's a 3-year low, right? Again, not very wise to jump at all time at multi-year lows, but we see that the Bollinger Bands are expanded. That means that volatility is coming back to this pair. So we might start seeing some bullish correction phase to the upside, which is why I'm keeping an eye on dollar African rand. Again, not a very popular instrument. Volatility is not as great as other pairs, right? But an interesting setup is an interesting setup. I don't mind what instrument it's happening on, right? Okay. Let me go through. Let's see if we have any other questions. No. Okay. So we have is New Zealand yen. That's an interesting pair. Let me find. Do I have it open? New Zealand dollar. No. Okay. Let's find out. New Zealand yen. Where is it? Here. Give me a second to change the colors because my OCD kicks in. Heading for new lows. I see the chart is high. um, Philip Bongo. Am I pronouncing that correct? Do you mean is New Zealand yen heading lower? Because new lows, we are far from uh, lows. I assume you mean is it going lower? Um, and my personal opinion is that similarly to dollar yen, right? Um, where we have big bearish correction. Same goes with New Zealand yen. So short answer is probably yes. I do believe we might get continuation of the bearish action on New Zealand yen. Um, Probably the first area of support might be around 91 yens here, which is an area of price reaction previously. Let me show you here. So 91 we had here and here. So probably we might get some sufficient, if not strong, support around 91. But in the meantime, yes, I do believe that probably I'm more biased on short um, New Zealand yen rather than continuing the bullish, recent bullish trend, right? So if that was the question, yes, I do believe that we might see lower values on New Zealand yen. I hope I answered your question. All right. So another thing that I wanted to mention for you guys, the people that are regulars, this is probably the 100th time that you will listen to this information. But I wanted to mention our social media platforms. You can find us on YouTube. If you search Exness, you will find our channel. We have a million videos that you can watch, literally. We have podcasts that we do on a weekly basis, Born to Trade and Trading Talks, which you can get more details on some trading concepts or definitions or analysis in general, or previous experience by me, my colleagues Michael and Stan. I mean, previous mistakes that we did, well, how did we handle them, and stuff like that on Trading Talks, right? And you can also click on playlists. Here we have them sorted. Trade of the week is what I wanted to mention. Every single week we come up with a trading idea that you can follow. Every week we have different instruments. For example, the one that my colleague Stan did last week, it was about platinum. And if we go, platinum can break the coil and move to 2650, right? So let's check on what happened on platinum real quick. So the idea last week was platinum at 2650, and it's currently at 2680, right? So if you watched that video when it got released and you took that trade, you are probably enjoying some profits right now. Congrats. For the rest of you that didn't watch the video, now you know, so you can watch those videos every single week and find out a pair that you can trade for the week. For example, the week before, it was oil, dollar yen, and you understand. You get the point. Every single week we have the trade of the week that you can watch the video and probably use that information to formulate a trading strategy or find a trade for the week. Running low on battery. Okay, so that's it from YouTube. Just search Exness and you can find a lot of interesting videos or content that you can watch. You can also find us on X. If you search Exness, we post every single day different charts or data or pieces of content that you can use daily. For example, pound, dollar, crude oil. Every single day we post some information that you can use. You can also follow my personal account on X. This is the username. I post every single Monday about gold and crude oil. Every single Monday you will find an article that you can click and it will take you to TradingView and you can read about my analysis. I do a fundamental analysis part and also a technical analysis part with a chart there that you can see. If you can find me on TradingView. That's my username. It's Antreas _Themistokleous _Exness. That's my my account on TradingView. You can see here US oil, gold, US oil, gold, US oil, gold. Every single Monday they're posting. Sorry, I'm rushing through. I'm running out of battery. Sorry about that. So yeah, you can find also Exness on Instagram, Facebook, any platform that you can think of. We are there. Just search Exness and you will find us. All right. Joyce, your Exness do a phenomenal job. Thank you very much, Joyce. Yes, we've talked about dollar yen. Yes, it is currently in bearish correction phase. In the short term, personally, I do believe that we might reach lower levels, probably around 152 or even higher, around 150, given that dollar remains under pressure. Right? Hope I answered your question, Suleiman Shah. Yep. Okay. So I think we can spend a couple more minutes. If you guys have any more questions, we can address them. If you have any instrument that we didn't cover or anything similar. Also, guys, let me know, is this your first time watching us or have you watched a previous live brief? So that, you know, I get an idea of how many new people we have here. I know Joyce is a regular, right? But what about the rest of you? Feel free to post in the chat one or something like that, right? First time or something. I will pick up some valuable insight. Yeah. Thank you for your feedback, Joyce. Okay. So I think we can wrap this up. Generally, in summary, be careful this week. Tomorrow we have the Fed's meeting. The US pairs might get volatile around the press release that follows the publication, right? We also have Bank of Canada's interest rate on the same day, earlier than the Fed. So if you're trading Canadian dollar, US dollar with Canadian dollar, be very careful because volatility might spike tomorrow, right? Gold, silver, precious metals in general are near all-time highs. Gold and silver are at all-time highs. So be very careful with jumping at the tops, right? Jumping in at the tops with long positions. Bitcoin is trading at a range, right? As we've seen earlier, between the two Fibonacci retracement levels. between 95 and 86.5. So again, if you're trading Bitcoin, be careful of those areas. What else? Yen pairs are not looking very great. I mean, for the pairs traded against the yen, right? Dollar, euro, pound against the yen are not performing that well, so you might be able to catch some short moves. So yeah, trade safely, use stop losses, right? Thank you very much, Mr. Suleiman. Thank you guys, and hopefully see you all next week. My colleague Michael will be hosting the next week's live brief, same day, next Tuesday. Thank you everyone that joined. Thank you for your questions. I hope I help you get some insights on or answers on the questions that you guys had. Thank you very much, and hopefully see you all next week. Thank you guys.